Welcome everyone to today's webinar, and thank you for your patience as always. As we said earlier, I think everyone can hear me, which is great. Everyone except David, which, as I said, give his ears a bit of a rest from my dulcet tones. As always, before we start, please may I draw your attention to the disclaimer that I know you can see on your screen. As you know, this can be a very risky business, so please, don't even think of using money that you cannot afford to lose. So that out of the way. Now, for those of you who are coming along for the first time, this is me and David in one of our trading studios, as it were, with our charts in the background, and we will be looking at the Forex markets this morning. Obviously, we've had the London Open. I'll be using the MT4. In fact, I'm using MT5 as my platform, and David has got Ninja Trader. And of course, those of you who come along will know that the basis of all our webinars, of all our trading and investing is premised on volume price analysis. I know some of you have the books. I know some of you are part of our Forex trading program, and I know others of you have some of our quantum trading indicators. And I know I can see names here that maybe you haven't invested in any of those things. And if you were to ask me where you should start, I would suggest that you look at the methodology of volume price analysis, which is the technical side, if you like, of our trading. It's how we analyze the charts, how we make sense of what is going on in the charts. Is the price action that we see on the chart genuine or not? Which ultimately, this is what volume does. It's a confirming signal, and as a confirming signal, it will also help you with entries, exits, and also keeping you in trades. And we have some great examples this morning from our all-time favorite, which is the pound yen. But that's only one part of the knowledge that you need to become successful in this business. You also have to understand the context that these prices are moving in. You have to put them in some sort of landscape. You've got the fundamental landscape. This morning we have the inflation hearings for the UK, so that's obviously going to impact the British pound. And you have the political landscape. We've also got Brexit. And for the US dollar, for the markets generally, we also have Fed Chair Powell. He's testifying up on Capitol Hill. That's today and tomorrow. So there's lots going on in background, and you have to understand that. And which is why we put together what we call a Forex trading library. It has the volume books, the price Forex price analysis books, but also the 3D book, which explains this in detail, how all these markets are connected. And this is a slide from the Forex program. You can see here you've got bonds, equities, commodities, and Forex pretty much sits in the middle. And this is what the program attempts to, not attempts, it does do. It will give you this background detail, this context that you need to understand, these relationships that exist between the capital markets, and obviously as well as how you interpret the Forex market, not only with Forex volume price analysis, but all the other things you need to know. And what we've also done, we've taken it a step further, in as much that we have created some specific tools to help us make sense of this amazing. It is an amazing market. It's a market that is it's marketed as a get rich quick market, which is a shame, because it's the one market that does allow just very ordinary people with perhaps not a lot of money to enter and to see how this the financial world works, and to make some money. But the indicators that we've developed, they're from quantumtrading.com. That's our company, and the ones that we specifically designed for Forex are what we call part of the currency dashboard, and we'll be explaining how you use them to highlight potential trading opportunities, and also to give you a longer term, medium and longer term picture of what is happening with the various currencies and currency pairs. So I'm actually going to stop. I know David hasn't been able to hear me for a change, so I'm going to pass to David anyway, and hopefully he'll be able to come through.
Thanks, darling, and a very warm welcome to you wherever you are in the world. It's absolutely... Sorry? I'm very faint. Hold on a minute. Let me turn my volume up a bit. Is that any better?
Not for me, but see if anybody else is.
Hopefully you can hear me okay. You're perfect here. Thanks, Melanie. Thank you, William. Great, thanks, Kurt. And I have to say it's very weird at the moment because I'm sitting here in the same room with Anna, but I'm not actually hearing her on the headset, so it's quite an odd experience.
Refreshing experience.
Anna says it's a refreshing experience. It's very odd. That's all I can. That's the only way I can explain it. If you've ever broadcast, you'll know exactly what I mean. It's weird. Great to see so many regulars coming along today, and I know a lot of you have got the tools and indicators anyway, and some of you are on the program till the education program, so great to have you here. If this is your first time joining us, a very warm welcome. We run it as a two-hander. We tend to focus more on the MT4, MT5 platform. Anna's on MT5. For those of you who have the indicator, you'll know you can switch very easily from MT4 to MT5 and back again at any time. That's something that you do through the quantum trading dashboard. So it's very simple, very easy. You control everything. There's no requirement for another license. It's just all controlled through the quantum trading dashboard. MT5 is a great platform. It's multi-assets. You'll have commodities, you'll have indices. And to be honest, even if you don't trade indices, it's just great to have them on the same platform so you can actually see what is going on in real time, 24/7, in terms of risk sentiment, which you'll see reflected through all the indices around the world. You've got Nikkei, you've got the DAX, you've got the Europeans, the DAX, the UK, FTSE 100, Chinese, Australian, Canadian, they're all there. So you'll always be able to track sentiment through the dashboard of your MT5 platform. Just makes it a little bit quicker, rather than going to somewhere like investing.com where you'll find this information also, or indeed if you've got full-blown futures contracts which run 24/7 on Globex. If you have any questions, please just drop them in the chat box. Happy to answer them there, or if they're longer questions, we will answer them on air for you. I'm going to pass back to Anna, so I will be plunged into silence once more, and hopefully you can hear us both loud and clear.
Okay, I've actually started with it's not necessarily, it's the fourth of the indicators that form the currency dashboard, and it's only fourth in the sense that it was the last one that was developed in the little collection. The first one was the CSI, then we had the matrix, the array, and this is what we call the currency heat map. And the reason I started with this is because I just wanted to show how the strength that we can see in the pound at the moment, and also you can see it actually occupies the top 6 spots on the heat map, and the cells across here. The beauty of this indicator is it not only tells you, it gives you a ranking of the 28 pairs, so you can get a feel for which currency is either very strong or is being heavily bought or heavily sold. And we can see here, we can see the pound here, but it also gives you an indication of what is happening across the time frames. Now, with the MT5 I've got here, I've actually stuck to the indicators pretty much picks up what the MT4 time frames are. We haven't gone out and used the 10-minute or the 20-minute chart. David's Ninja Trader one has slightly more. I think you've got more time frames, haven't you, David, on your one? But the reason I wanted to highlight is it also, other than, well, there's a number of reasons. First of all, it gives you an instant picture of what the pairs are doing. What is being, as I said, being bought heavily or being sold heavily? Is it consistent across one particular currency, or sometimes you'll see them all completely mixed up and there's no clear direction for a particular currency? But it's clear on this one that the pound is being heavily bought. But what's also interesting is the counter currency, because the counter currency for a major like the British pound also gives you an immediate heads up into what is the sentiment in the markets. You all know, those of you who come along regularly, have read the books, you'll have heard us say this many times before, that currencies, individual currencies, play a role in this market. So they will be perceived, they will be bought and sold when it's either risk on or risk off. And at the moment, it's very much risk off for all sorts of reasons, rumors that the tariff situation between the China and the US is perhaps reaching some sort of conclusion, positive conclusion. That was, the one reason used for the huge run up in the Shanghai composite, which I think went up something like 6%, 5-6%, which is unheard of. I mean, it's just enormous, an enormous rise, as it were. I haven't seen the volume on that, but if it's the kind of move we've seen in the Shanghai previously, where these huge moves, not accompanied by a lot of volume, it will obviously smack of some kind of a trap, and it does that quite often. But the countercurrencies that we can see here on the pound, we've got the Aussie, the Swiss, and the yen. The Swiss and the yen are safe haven currencies, so if they are being bought, if the pound yen was down at the bottom, it would be risk off, as with the pound Swiss. And the pound Aussie, well, that's the Aussie is a curious one, because the Aussie is also the fate of the Aussie, if you like, is also tied to China. And here we have two currencies where, if you like, they should both be the recipient of good news. And the market being what it is, you can't have it can't be both good news. One has to be good and one has to be bad, as it were. So the pound Aussie, the market has decided there is more positivity for the pound, and the reason for that is, those of you who follow it, and you have to if you trade the British pound, is this the media reports that there will not be a no deal, in the sense that the UK is not going to crash out on the 29th of March. There'll either be an extension or something will have been cobbled together for the 29th of March. Whether that is true or not, it's not, we can't say. All we can do is watch the charts, watch the price action, watch the volume, and see if it offers us there is no such thing as a no risk trading opportunity, but a lower risk trading opportunity. The danger with anything with the pound is that you can you can be hit with volatility from all sorts of quarters. Somebody will say something. So in the sense that it has a political risk, it has a risk that is outside the usual drivers, that is the additional risk that you will have to factor in to any potential trade for any trade that has the pound in it. The way to approach that is to be aware. Secondly is possibly just, if you see an opportunity, get in, take it, and get out. Don't hang around for too long, because, as I said, it is this market is uncertain, but there is additional uncertainty with the British pound. And also understand the nature of volatility, particularly with the volatility indicator, when it triggers, when you have news, and how you play that, which we've covered in previous webinars, and we'll also cover it here, because it happens with, as I said, with the monotonous regularity. So that's looking at the heat map. Now, what the heat map is also telling you is that from a reversal potential, in the sense that the pound's being bought very strongly. Well, at some point that buying will stop. We will have a reversal, and what it does in ranking these the pairs, as they do, they highlight the ones where this is at the moment, this is strongest. So on your radar you could say, well, if you're not in the pound yen or the pound CAD or even the pound Aussie, you say, or the cable, say, well, maybe it's one that I can watch for a potential reversal opportunity. Now, reversals will happen in the faster time frames. The issue is, on the faster time frames, is it enough to be able to take a trade, and is it enough of a reversal that will then ripple through to the slower time frames, or is it just going to be a sort of one-hit wonder, as it were, which is perfectly acceptable to take, all things being equal? So that's what I wanted to say about the heat map. David, do you want to add something to that? Because I know David's been watching the pound yen. Do you want to add anything to that?
Sorry, I just wanted to check Anna was off, because I can't actually. Because I'm not hearing in my headset. I'm not sure when she's on or off, so that's fine. Just wanted to make sure she's switched off. Just to really reinforce what Anna's saying about the heat map, it gives you so much information all in one place, and you can use it in so many different ways. The ranking ladder is much more appropriate for, choose the words carefully here, longer term intraday trading, if you will. So when you're looking at the ranking ladder, you're not looking at that on a minute by minute basis, but you would be looking at that on perhaps an hourly basis, let's say, to see that a particular pair has moved up one position or down one position, or maybe even two. And over the course of a day, you might find it's moved perhaps two or three. That's the sort of time horizon for the ranking ladder, because the ranking ladder is weighted by the time frame appropriate. So for example, and this is just common sense, a 1 minute time frame would have less weighting in terms of bearish or bullish sentiment as opposed to a 5 minute or a 15 or 30 or an hourly, and so on and so forth. As you move into the slower time frames from the fastest, they carry a little bit more weighting because they have more significance to the position within the ranking ladder for that particular pair. So for example, at the moment at the top there we've got the pound Aussie. It's green right the way through the spectrum of time frames. At some point, the bearish sentiment that you're seeing in a very minor way on the 1 minute will start to ripple through to the 5 minute, and ultimately to the 15 minute, and then to the 30, and so on and so forth. And at that point, the pound Aussie will start to move lower, come down the ranking ladder, not in a fast way, but in a relatively measured way. And of course, that movement off the ranking ladder, down the ranking ladder, as those cells change color and hold that particular color, then of course you'll start to see that as a reversal on the charts themselves, starting with the faster time frame and gradually rippling through to the slower time frames, if it's a longer term reversal in trend rather than perhaps just a minor pause point. And from an intraday trading perspective, and now I'm talking from a pure scalping perspective, again, you move away from the ranking ladder and then you're focused on the cells themselves, because what the cells are giving you, they're giving you a sense of obviously what you're seeing on the charts themselves, but they're also giving you a visual instant picture of whether you're seeing bullish or bearish sentiment reflected, first of all, across the faster time frames, and secondly, whether that is actually moving through the spectrum of time frames from the fastest through out to the slowest ones, which will be your 5 and 15 for an intraday scalping perspective. So it's really a chameleon, I suppose, of an indicator that can be used in many different ways, and it's really just a question of focusing on that part of the indicator that's appropriate to you and the time frames that you're trading for that particular position that you're taking in the market. The way we tend to use it, we tend to look at the extremes on the ranking ladder. Those are the sort of opportunities where something is equivalent to a currency strength indicator, where the pair in this occasion is either very strongly overbought or very strongly oversold. And of course, also isolating that out in terms of whether that is reflected in terms of the particular currency. And of course, at the top there, you've got 6 of the pound pairs up at the top. And down at the bottom, you've got the 7th one there in the euro pound, with the pound as a counter currency. So over and Anna's just isolated them out there in terms of the pound. In terms of the sentiment to the pound, it has been very strong over the last couple of days. So those pairs therefore are ranking in perfect array, 6 at the top, 1 at the bottom. Now, at some point, they will start to move. They have to, because all currency pairs ultimately move away from overbought, oversold, and back again. It's part and parcel of the way the Forex market works. But I make the point that this is a much slower term perspective. You're not looking at that as sort of 1 minute, 5 minute opportunity. You're maybe looking at that over the hourlies, and certainly on an intraday perspective, the slower time frames. So I just wanted to really talk through the heat map and really explain what it's trying to do and how to use it in whatever way you are trading for a particular position in the market. It's just a very neat way to get all that information onto one indicator and it avoids having multiple screens. It just gives you all that information very, very quickly, which is what indicators are about. They're there, supported by the volume price analysis methodology, but they are there to give you information fast. And that's what the heat map does. I'm going to pass back to Anna.
I just want to add one more thing about the Aussie dollar, which I should have said earlier. You see, the pound is being bought, and given that we are in risk off in inverted commas, given all the the seemingly positive noises that have come from Donald and the Chinese about the likelihood of the March 1st deadline. March 1st was this deadline that was given for a resolution to the talks about tariffs, and it was kind of truce period, as it were. And you think, well, the Aussie is a risk currency, so why is it perhaps being sold? Is it being sold against the pound? And if you look at the Aussie down here as well, it's not exactly covering itself in glory against in other pairs, and there's two reasons for that. First of all, the pound Aussie is clearly reflecting the sheer strength of buying overall in the single currency, i.e. the pound. But the Aussie is also suffering in the sense that it's all very well on the surface, all this good news in inverted commas that's coming out, that there's a possibility of an agreement, which we hope so. No one wants bad feelings in the amongst countries, etc., etc. The Aussie suffered a huge jolt by the Chinese. If you remember, we mentioned it last week, where their coal exports have been banned from I think one port in China. And the Aussie, as I explained last time when we looked at a kind of a heat map of what countries export and import amongst themselves, if you recall, which I'll bring up later as well, 30% of all their exports go to China. So the Chinese saying, they're going to make things very difficult for Australia, and are even not going to take any more imports of coal for their power stations. All Chinese power stations, well, most Chinese power stations are driven by coal. That is going to impact the Aussie. So if you like, it's despite the fact that the Aussie is a risk currency, so when markets are positive and in good news, you would expect the Aussie to rise. In this case, yes, we are in risk off. Yes, there is great strength in the pound, but you have to recall it is also being impacted by this other factor, this huge factor. And once everyone knows in the next sort of week or so what is actually going to happen with regard to the tariffs, what's going to happen with Brexit, that is going to be reflected in these pairs. So we'll either have continued strength in the pound and other risk currencies, although apart from the Aussie, or we will see, the mother and father of all reversals. But what we're seeing at the moment is the positioning of the pairs in the market, driven by obviously the technical picture, the fundamental landscape, the political landscape, and how the different drivers of the two currencies are also reflected in the pairs, and why the pound Aussie happens to be at the top and it's not necessarily the pound yen, because if it was a genuine, really huge euphoric market, as it were, you would expect to see all the yen pairs right at, you would see massive selling of the yen and all the yen pairs at the top. So if you understand these factors as explained in the 3D book, that is what you are seeing reflected in this heat map. So the heat map is such a sophisticated indicator because it tells you not only the technical strength and weakness of a particular pair, but also really gives you an instant insight into the broader fundamental related market and political landscape as well. That's what I was going to say. Shall I move over to you, because you've got something on the pound yen at the moment. While that was oh, you're on something completely different. David had something on the pound yen, and let's see what the pound yen is up to here. Just very quickly, this is the daily chart. In fact, we've had the move away. You're on the Euro Aussie. Fine, David's got the Euro Aussie on a shorter time, faster time frame. This is what we're seeing. This is the strength in the pound Aussie. A lot of volume going in. We've gone away from the volume point of control. The trend monitor has now transitioned to bright blue. We had this. This was the rise, and we had the congestion. It kind of never really went into. Well, it didn't go into bright red. Now we've got to see. Well, we can see where it is on the heat map. Is it coming, to an end? Is there reversal on the horizon? Well, possibly on the faster time frames, there'll be plenty of opportunities to maybe trade to the downside. And in fact, a really nice little move here, which I think you were going to cover, darling, but you didn't, when we're talking about a potential reversal on a shorter time frame, faster time frame. This is the 3-minute chart, and we have a really nice example here with a classical VPA, where you had the volatility, as always, coming in just prior to London. We had a really nice run up. With pound yen at the moment, it's very, very spiky. It gets there, but oh boy, it certainly doesn't do it in a measured way, as it were. Then we had this sort of doji candle up here with a lot of volume underneath it, so we know there is potential, something is going on. There's potential for a reversal. Because now the doji is not a reversal candle, but it's an indecision candle. But given that, if with the amount of volume going underneath it, if you look at the volume here, you have increasing volume, you would expect that candle to be much, just be a solid candle. It isn't. There's a lot of struggle. There's a struggle going on. And on this occasion, it did actually reverse volume point of control. Then we have the down candles. But is this genuine? If you look at the volume profile under here, you had the down candle, a bigger down candle, and then the second, third, and fourth. We've got 1, 2, 3, 4. It's this little slice of price action here, which may not seem very much, but if you were looking for a reversal based on, this is perfectly genuine, the market was going to pause, was going to turn over, but the fall away in the volume tells you that this is not genuine, because if that were going to carry on lower, then that should be rising as well. You need volume to drive the price higher, but also to drive it lower. And in fact, the stopping volume came in, and so it carried on its way. But it's around the volume point of control. Sometimes you can take these opportunities when basically the instrument is in congestion. It just depends on the range, and it depends whether there's enough in that range to be able to take a move either to the upside or the downside. I mean, it's I suppose it's what they call swing trading, isn't it, David? Yeah, not, to use a terminology that most traders understand. And then we've got the same thing happening here again. We've got a breakaway as well. We've got not reasonable volume, but the next candle, the size of that candle and the volume underneath it, that should be higher than that. So what happens? It suddenly goes straight back up, as we can see here, with the buying support coming in. So there's a lot of effort going into the pound yen at the moment for it not to fall. It's not going up in a straight line. It's still between this sort of fairly wide range that we see around the volume point of control. Is there a chance to take a trade? That's very much down to you, whether you are prepared to trade within a congestion phase that we are seeing at the moment. And the way we judge that is actually look at the Renko, and the Renko is a mess, basically. You can see that the going up, then it pulls back, yes it goes, and then it just chops sideways. And to be honest, there's probably other opportunities out there that are less fraught with less risk, as it were, and risk in the sense of being bounced. It's been very easy, you'd be bounced about in this particular pair. Right, I'm just going to pass over to David, because you've got is it the Euro Aussie? I've got several. You've got several. Okay, I'll just pass over to David.
Just switching screens, bear with us a moment.
Did I say anything?
No, I've got the Ninja Trader up.
Sorry?
I've got the Ninja Trader running, and just switching screens. There we go.
I can see you.
Does it come up?
There we are.
Yeah, brilliant. Okay.
Nice smooth thing for you.
This is the multiple. I've got multiple time frames here. I've got 3 minute on the left, I've got 5 minute, 10 minute to the top right, and then down at the bottom we've got 30. I've got the Renko running in the middle, and over on the right I've got the daily chart as well. And what I wanted to just walk you through is really, we're pretty much spoiled for choice, and this morning is interesting because there are so many opportunities, but there are also equally those that are not offering opportunities, and it's a question of teasing out, where the opportunities are and what is the best opportunity to take. So let me just go back to the CSI for a moment and just show you what I've been looking at for the last sort of 15-20 minutes. And really, what we've been seeing is, this is on 5 minute, and I've also got the 15 minute here as well. Now what we're seeing in terms of the British pound, we've had strong buying, it's been in overbought, and now we're starting to see it sell off. And the same is occurring on the 15 minute. So we're just looking at the yellow line here. But as you can see here, it's been up here before, very strongly overbought, then it's sold off, then it's rallied again, and we're back into the overbought region again. And that's a part and parcel of life. It's just a fact of life. The question is that if you're looking at the pound, which particular counter currency would you be considering it against? And it's really a question of teasing out which are going to offer the best opportunities. If you're looking at it in terms of the pound yen, the yen is starting to flatten off a little bit. It has been rising, but it's starting to flatten off. So, that's probably not the best one. And what jumps off the page at you instantly is the strength of buying in the euro, for example, this orange line. You can see that on 15. We've also had it on 5, very strong. It's flattening a little bit on 5, but it's still climbing on 15. Now, if you were looking at the dollar, for example, which is also rising strongly, would you look at the euro dollar as an opportunity? And the short answer is no, because both the currencies are rising together. So there may well be a minor trend higher purely because the strength of buying in the euro is sufficient to outweigh the strength of buying in the dollar. In other words, buying in the euro is actually stronger than buying in the dollar. Is that actually a pair you would consider? The answer is no, because there are far better opportunities where you're looking at a currency which is falling strongly against a currency which is rising strongly. And as far as the euro is concerned, you'll be looking at something like the New Zealand or the Aussie, because that weakness in the Aussie is driving in the opposite direction to strengthen the euro, and therefore that will develop a strong trend. The question of where you get in is always one. And if we're on the 15 minute, let's go back to the 5 minute for a moment, just look at the euro Aussie. The euro is continuing, but it's starting to flatten off a bit. Nothing to say it won't continue higher, deep into overbought, but as you can see here, the Aussie is starting to run out of a little bit of momentum in terms of downward momentum. On the 15, similar sort of picture. So if you were looking at that as an opportunity now, again, it's a question of making a decision based on where the two currencies are. Ideally what you're looking for, and this is really what it comes down to, if you're looking for a reversal opportunity, right now, for example, you've got the pound at the top and you've got the Aussie at the bottom. So would you consider that as a full-blown reversal? You'd be patient, you'd wait, but in that scenario, you are waiting for a reversal of the Aussie from the downwards momentum. In terms of jumping into, in terms of jumping into the Euro Aussie, it's a question of how much momentum is left, how much travel, if you will, is left for the Euro to climb higher, given that the Aussie is down here already. Now, there's nothing to say this won't go deeper into oversold, that's fine. But in terms of the amount of time left for that particular opportunity, it looks as though it's starting to run out of time a little bit. So, that may not be the one to consider now. And just going back to what I was saying earlier, in fact, go back to the 15. In terms of currencies moving together, you've got the euro here and you've got the Swiss franc. Again, it's another currency you might consider. The Swiss franc, really strong buying in the Swiss franc. And again, you could match that against the New Zealand and against the Aussie. You wouldn't look to the dollar Swiss, for example, because both are traveling in the same direction. So it's not the best one to consider. You wouldn't look at the euro Swiss, again, because they're traveling in the same direction. And to a greater extent, you wouldn't look at the yen either, because they're all twisting around and there's no great momentum for the yen at the moment on 15. To see what it's doing on 5, it's flip-flopping around in the middle. And if we come back to timeframes again, this is the Swiss franc, the green line. It's right up into overbought, but on 15, it hasn't got there yet. And again, it highlights this whole issue of trading Forex, and indeed anything per se in terms of trading. What is your time frame? How long are you going to be in this position? Are you there as a scalper, or are you looking at this as a longer term opportunity? Because if you're looking at it as a longer term opportunity, if I was to go out to 30 and the 60, for example, what is going on in the 5-minute, where we like to see the Swiss franc sell off and maybe the Aussie rise a little and the New Zealand dollar as well, really what you're seeing from a longer term perspective is just a reversal or a pullback. And that's just a fact of life. So traders will be in trading reversals and pullbacks on fast time frames. You as a longer term trader may be holding that position, just accepting the fact that nothing goes up in a straight line or down in a straight line. It pauses, it reverses, and then it continues on its way. If we go over to the currency matrix, this is on 5-minute, just to sort of highlight what is going on. I've got this attached to the Aussie dollar, so what you're seeing on the right hand side here is actually the selling in the Aussie that we've seen, and I think 4 or 5 minutes ago it was right down at the bottom. It's now starting to lift the Aussie dollar off the bottom of the ranking ladder. What's interesting also, it really does highlight for you what I was saying in terms of the CSI and which pairs to trade and which pairs you're looking for, because what the currency matrix does is it then isolates out, and I've got it isolated on the dollar here. So we're seeing all the majors here. So are we seeing universal sentiment? Which way are they moving up and down the ranking ladder? Are we seeing a shift in sentiment in terms of the dollar? Are we seeing a move towards more dollar buying, or are we starting to see a change in sentiment to the dollar itself? And all of that is reflected. Obviously, when all of these are aligned and you've got heavy selling or heavy buying of the currency, then they'll all be sitting down at the bottom of the ranking ladder or up at the top of the ranking ladder for the currency matrix. And you can attach this to any time frame you wish, and you isolate out the whole time. And what the one at the top here, if I just isolate out the euro, what it gives you is a sense of where that strength of momentum is. And we've talked about the euro Aussie. That's why it's up at the top of the ranking ladder, because you're seeing strong buying in the euro and strong selling in the Aussie dollar. And that's also reflected in the euro New Zealand dollar. And then as you move down here, it's far less so. As I said, here the euro dollar, these two are moving together. Yes, you might see a minor trend, but you're not going to see the strongest trend purely because those two currencies are moving in roughly the same direction. Move over onto the array. Let's just click that back on, so we've got all of them up here. And what you're seeing at the array, this is a slightly slower time frame for just to isolate out the pound. There we are. You can see the strength of pound, the buying in the pound that we've had. And the reason the pound Aussie is at the top is because we've had strong buying of the pound and strong selling of the Aussie. And all the pound pairs are moving above the fulcrum, with the euro pound down below here. And the strongest buying of all is in the pound Aussie. You've got the pound CAD and pound New Zealand lower. So again, it's giving you a visual on several things. It's giving you a visual on the trend strength, the trend momentum that's driving into these markets. And the second ranking ladder here is giving you a perspective on when a currency is approaching or is at an overbought potential stage. When it's the darker colors, it's approaching those regions in brackets. So we've got these currency pairs are approaching overbought. These are all starting to approach oversold. And the pound Aussie, as you can see up here, has gone to a brighter blue. The brackets have gone, and we're now at a potential, and it is only a potential overbought situation. It's just giving you a heads up. Go and look at that particular chart, and what you'll see there, you'll see it reflected on the CSI, you'll see it reflected on the matrix, where that particular currency and the associated currencies and pairs, in particular the pound Aussie, is getting to a situation where maybe it's starting to move. It's had a trend, and now it's starting to congest. You'll be looking at the volume relationships, volume price analysis. You'll be looking at maybe you've got some volatility coming, which is the reason for a pause point and maybe congestion. Maybe you've approached a volume point of control in a slower time frame. Whatever it is, there will be 26 reasons as to why this is potentially approaching an overbought situation. Yeah, I'm just going to go back to the charts. There we go. See what's going on in terms of the Euro Aussie, which is also pausing. And there are, again, several reasons for that. Let me just switch off, pass back to Anna.
What I've had, one of the elements of VPA, obviously price action volume, is actually support and resistance. And we have to identify those levels that are important to other traders, to the markets. That's why people use Fibonacci. We've got I haven't looked at, I had a quick look at the option expiries. There's some big ones coming up for euro dollar, so I'll pull them up just before we go. And I was talking about the pound yen and why it is really in an extended congestion, this sort of ledge, if you like. This is the 30-minute chart, and it's a really good example. So we've had this run up with sort of pauses, but you can see with the wicks to the top and bottom of the candles, it's not been a smooth, a smooth move, as it were. Constant pullbacks, then moving further. Choppy price action, very, very difficult. Making it very difficult to trade. Not impossible, just making it very difficult to trade. And we look at what's happening here on the 30-minute chart, and this is the indicator we have as part of the quantum suite to give us a heads up of which, what levels are important, what are critical. This is the 30-minute chart, and we can see here the failure that we've had at the R3, which is in the 145, say 145.50 region, and it's gone up to it, pulled back, gone up to it, pulled back. Now R3 on Camarilla it's just one of the levels of the 6 that come part and parcel of the indicator. And if it does get through that, it also tells you where it is likely to be heading. So if it comes off there, manages to get through, the next obvious target is 146.15. Now the levels on the charts up to, but not including the hour, these levels are refreshed every day. So you have fresh levels on the faster timeframes. But with levels and on different timeframes, it's confluence. It's whether you when a price approaches a level on a faster time frame, is that level of any significance on a slower time frame? So if we move up to the hourly chart, and this is very significant because of the levels in Camarilla, the fourth level, whether from resistance or support, it's just part of the protocol. This is very, very significant. R4 is just that if price manages to get to R4 and breaks through with volume, with some momentum, then it is considered a good breakout, as it were. In the journey to the R4, you may expect a lot of pullbacks and all sorts of things going on. But that's the point. Is my point is one of confluence. On the faster time frames, we can see that the pound yen has attempted to get through. It's about 145.50, 145.60, and you can just go through. If you scroll down here, you can see here there's a strong, this is around the R3. These levels, they're just, you have to see them, have to give them a little bit of room to breathe, as it were. But you can see the number of times that it's been tested. Now it's testing it again. Yes, it has spiked through, but on not one occasion, I'm not sure it actually closed above there. Generally speaking, it hasn't managed to close above the R3. And you think, well, why is that happening? Well, this is the reason it's happening. It's because it coincides with this important R4. What happens with the R4 is if it gets through, what normally happens, it will then come back to retest, and then what is it aiming for? That is the next level, 146.68. And the difference with these levels is that these levels are going to be here for the rest of the week. So this level is going to be significant in this session, and it's going to be significant in the US session, as I said, for the rest of the week. And we have even longer term levels. If we go to the weekly chart, here we are. These stay on for the whole month. Hopefully, there we are. And on the monthly chart, it's actually on the R3. This is where the R4. These levels are refreshed at the beginning of each trading month. So confluence of levels, well, support and resistance, very important part of volume price analysis. It's one of the elements, the 5 elements of volume price analysis, but it also helps to explain what you are seeing and why it is happening on the faster timeframes. And if you look at the Renko, we are most definitely in a congestion phase at the moment, and we know why. It's got to get through this level. It may do, it may not. But as you know, if pound yen is one of the pairs that you like to trade, or you want to try and take a trade on, you have to understand not just the price action, not just the volume profile, but also how is that sitting within the sort of the support and resistance. What is the support and resistance narrative? And we have Camarilla, and on the very faster time, here we are around the VPOC, the volume point of control, which of itself will tell you we are in congestion. So I just thought it was a fantastic example of pulling all these different elements of VPA together. Very frustrating, but as David said, nothing stays in congestion forever. Nothing stays overbought or oversold forever. We just have to recognize the type of price action that whatever we're looking to trade is in. Is it in a congestion? Is it looking to break away? Is it looking to reverse? Once you understand that, then you can position yourself. You say, do you know what? I'm going to wait until that, and I'm going to take a reversal, or I'm going to wait until that happens, and I'm going to look for a breakaway. And having an understanding of these different types of support and resistance and how they will influence any breakaway will also help to determine whether you're going to, what do you need to get a successful breakaway and get on the end of a nice trend that we saw on David's the Euro, was he, darling? Yeah. But I'll go back to you. You're looking at something, aren't you? Okay. Oh, and if you've got any questions on that, as I said, I think there's a question there. I'll have a look at in a second while I pass over to David.
Just back on NinjaTrader, and hopefully you can see my screen. Let's just switch over to, I just wanted to show you, let's go back to the multiple time frames, because we're now starting to see the potential reversal set up. We've had the move higher through the faster time frames. This is 3, 5, and 10. You can see the trend monitor has been bright blue throughout. And if this is going to develop into a reversal, then what we're expecting to see is a change in the trend monitor status from bright blue, possibly through to a darker blue, dark red, and then full-blown bright red if we get a reversal to the bearish side. As I said earlier, the reasons why we're seeing a pause point, lots of different reasons. First of all, on the very fast time frames, we've got the pivots came in here. High volume, we had some weakness coming in here, not enough to perhaps signal a full reversal, but certainly a suggestion of weakness. We've got some selling coming in on that particular candle because we've got high volume and we've got a decent wick to the upper body. So at the very least, it looks a little bit weak, a little bit toppy for the time being. Pivot comes in, pivot high, pivot low, really just signaling that we're moving into a congestion phase. Then we've got some decent volume comes in under this one, but again, effort to rally, really not convincing in terms of further reinforcement of the bullish trend. And now we're moving into the congestion phase. On this little sequence of candles, what have we got? We've got falling volume, and again, market trying to rally. Pivot comes in on the top there. Weakness on just on the price action. Just effort to rallying, falls back, closes somewhere near the open. Volume's pretty weak, so it's not looking terribly strong at the moment. And if you move out to the slower time frames, all of that is really reflected in terms of, first of all, the volatility indicator. We had volatility triggered on the 5-minute, so we're expecting at the very least some congestion period to follow. That's also reflected on 10. Again, we've got volatility, so the volatility comes in. The expectation is congestion. Doesn't always follow, but 8 or 9 times out of 10 it does, purely because that's signaling insider participation, market maker participation. They're involved. They're likely to set traps, because what happens when volatility comes into the market, it's all about the compression of time. Volatility is nothing more than the compression of time. Price action is being compressed into a very short space of time. What would normally occur over 20, 30, 40 minutes has been compressed into one candle of 10 minutes. So this price action has moved very quickly, and the emotion that then is driven is the fear of missing out. You as a trader want to jump in. That's what the market makers bank on. They've done this for hundreds of years. They're very experienced at it. They know exactly what they're doing. They know for a fact that if a market moves quickly, they'll suck in a load of traders, because those traders cannot resist the emotional drive to jump on a market that is going to deliver for them what they think is easy, quick profit. And it doesn't. What it delivers is pain in abundance, generally either through the prospect of the time that you're now sat here, sat in a weak position, or alternatively, a full-blown reversal and you get taken out. Simple as that. If we go back to the 30-minute, exactly the same scenario. We had this very strong move over 30 minutes, and we've now got volatility triggered, so the expectation is that we're going to see some congestion build. Doesn't always follow. It's not, there's no rule set you can say, well, this is always going to happen. But the indicator just gives you that heads up, and it triggers in real time. You don't have to wait for the candle to close. So once the price action's exceeded the average true range, which is how the indicator works, then it will trigger, and it will give you that signal, and then you've got a decision to make. Am I going to wait? Do I close out? What do I do? But at least you've got the information that the price action has moved outside the norm, if you will. There's been volatility, so you know for a fact the market makers are inside the market, and therefore you've got a decision to make. And the Renko down here, you can see we're in congestion here as well. We've got the pivots top and bottom. It's just giving us our levels, giving us our support and resistance regions defined by the pivots themselves. And now we just have to wait and be patient. Sure. Always have my chat box closed. Apologies when I'm in full flow. Sorry about that. A breakout, what are we looking for in terms of a test? In terms of a test, when you're looking at a breakout from in any market, it doesn't matter which market you're looking at, you're looking for the price action to move back in. Basically, what all a test is it is moving back into an area which has seen either high selling or high buying volumes, and that area of price is now reflective of relatively low volume, because what that's telling you and what that's telling the market makers and the insiders is that whatever selling pressure or buying pressure was there has now been absorbed. So in a down market, when you've seen a strong downtrend, you've seen a lot of heavy selling, the market congests, you then see a move back inside to test that region. In other words, the market goes back down and then rallies and probably closes somewhere near the open of that particular candle, but the volume's relatively low, generally quite a small candle. And what that's telling you is that the selling pressure that was there previously in the same area of price congestion has now been absorbed. In other words, the sellers have been taken out of the market, and therefore it's good to go for a reversal to the upside. Equally, at the top of the market where you see heavy buying, the market makers, the insiders, the big operators, they will test, they'll push the market higher. If nobody jumps on board and it closes back with a low volume, then clearly that's telling you that the buying pressure has been absorbed. The buyers are no longer interested and they've moved away from the market, and you're therefore likely to see a reversal into a bearish trend. That's how it works. That's it. And you see those in all time frames and markets. And just finally, just to finish off, other indices to look at. Obviously, what we've been looking at is also reflected in terms of the three major currency indices. This is on the yen. You can see here the yen is just chopping sideways, not going in any particular direction. This is on 5 minutes. So again, it's a question of being patient, waiting for a breakaway on that to develop strength or weakness in one of the pairs. This is the dollar. We had the rally this morning. We've now seen a reversal into congestion. If we're going to see further strength, then we've got to go through this region, which is building quite strongly. And this is the strength that we've seen buying in the euro. So, you know, if you were trading this morning, you know, it's really buying the euro. That's the flavor of this morning, and that's probably the currency to focus on for the time being. But again, running into some potential resistance at the top there. I'm going to pass back to Anna.
Okay, we're just back on the dear old pound yen, and back on the hour. As we can see here, that's on 30-minute. There we are. That's the critical level. If this is one of yours, and you know, sort of for an entry, well, you know, clearly it's got to go through that level here. The reversal, if you like, any potential point that you want to use on a candle pattern, you will see on a faster time frame, but it has to, you know, get through the R4 first, which is what the 1 hour chart is telling you at the moment. I mean, the Renko is a brilliant. Sorry, apologies about that. So completely threw me off my stride, which is not difficult. These two, I think they probably want to go out for their walk because it's a rather lovely day here today. We'll leave it there. I just want to quickly finish off with the, as we said, we'll be looking at the currency dashboard for those of you who may be coming across it for the first time. I'll just do this. I'll still sort this out. Right, the cost of the dashboard, that's all 4 indicators together. Individually, they come to $770, but it's actually as a bundle, it comes down to $497. And as we said earlier, it's all the information you need as a Forex trader. Overbought, oversold, strength, weakness, global sentiment, and risk. You can find details of the dashboard and all the other indicators that come with part of the quantum tools over at quantumtrading.com. This is the front page. You can see, you just click on the ones for MetaTrade and Ninja, and we also have them for TradingView. The dashboard's not available on TradingView, only the CSI, because of the way the data is delivered by this particular platform. You can actually just buy one. You'd have to buy a bundle. People say, well, what do I start with? And we always actually suggest starting with the currency strength indicator, the individual lines representing the individual currencies, to see what is happening in the markets. And you know, it also sets up potential trading opportunities. You can also invest in the full package. If you do, you actually qualify for receiving all future indicators for free. And everything is covered by our 7-day money-back guarantee, and you will get 24/7 support, and all upgrades are free. With regard to the education, you may have heard me mention the Forex program. This is over at quantumtradingeducation.com. These are the modules that are there. It's a hugely comprehensive program, and we are absolutely delighted for the traders who have joined us on the program. From the feedback that we've had, they're all doing extremely well because it covers everything that you need to know, and it does include the full package of quantum trading indicators. And you can follow me, what I do on my analysis over at annacooling.com. The books are there, the individual books, and you know, details of the what do I call them? The box sets are there as well. That's all for us today. David, is there anything you want to say? You can. Is there another slide? Let's have a look. No, there isn't. If you want further information, you can drop me a line, anna@annacooling.com, or you can drop David a line, david@quantumtrading.com, on anything you've heard here, information on the indicators, information on the program. If you've bought something from us, one indicator, a bundle, and you want to upgrade to something else, we will always credit you with what you have purchased. So, you know, you'll never with us, you are never out of pocket. We are back on Thursday. We've got two. We've got the US session where we just focus on Ninja, and then we have the day trading session later on in the afternoon where we look at the indices. So it's all fun and games at the moment, as always in this market. Lots of trading opportunities if you understand the risks that are, you know, around at the moment. But there's always risks. It's just a case of how much of a risk and being able to quantify them. I suppose as a trader, you're really, you take you're what do they call, you're a risk analyst, and you have to make an assessment of those risks. Whatever you're doing today, have a wonderful day. If you're not with us on Thursday, we are back next Tuesday. Enjoy your trading. If you're in the UK, enjoy the weather, which is, you know, wonderful at the moment for the end of February. I seem to forget this time last year we were sort of knee deep in snow, but there we are. So we will catch you next time. Take care.